I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully lots of great ideas and opportunities for you throughout the show. Well, this was another big up week for the stock market, as we have seen lots of news coming out in the background that's moved markets. Actually, the market started out kind of slowly during the week on Monday and Tuesday, but then the State of the Union address brought a big lift for the stock market. We saw some pretty big rallies on that day. Other news in Europe also was help lifting the market, specifically the banks, and that gave the stock market a big lift. Late in the week, the markets did start to stall, however, as more background news was coming out. The questions are, is it the Fed potential rate hike that Yellen mentioned on Friday that might be getting ready for getting in the way of the stock market rally as interest rates become more competitive? Maybe it's the focus on Attorney General Sessions recusing himself from any investigation about Russia. Maybe it's the Republicans fighting over the repeal-replace bill for Obamacare, where they locked Rand Paul out of seeing what that bill was. Maybe the stock market is just tired. Maybe it's the border tax discussion, which has really picked up here towards the end of the week. Man, that would be a horrible mistake. You saw Target get nailed this week, while Walmart would really be negatively affected by that. Lots of reasons to think that a border tax is a big mistake. Or maybe it's just that the S&P 500 came up and tagged a very important resistance level that we didn't think it was going to get to, but we had it on our charts anyway, and it got there this week. I'm going to show you that chart in just a couple of minutes. So the stock market did get a rally going. Overall, the S&P 500 and NASDAQ up a fraction this week. Dow Jones Industrial average up about 1%. The Russell really now starting to struggle, and there may be some divergence going on as the Russell actually is down small on the week. Bond market got slammed as the odds really have increased that we're going to get a rate hike. As a matter of fact, as far as the percentages goes, the markets are giving it about an 80% probability of a rate hike and in March. And based on what we're hearing now out of Yellen, I would say that it's a 100% chance that we're going to get a rate increase here in March. It's already priced in the market as the bonds got hit pretty hard. In fact, we're going to show in our short-term view member video coming up later in the day on Friday that we think that the decline for the bond market is going to be ending pretty soon. Have a lot of interesting things to show in that member video of the short-term perspective for the coming week in 5 major markets. The dollar, that was up on the prospect of higher interest rates. And it looks like also there's some big date coming up here, March 15th, for the Dutch election, the U.S. Debt ceiling. All of that is important. And the polls came out Friday that showed in France that Le Pen actually is slipping. And that's some news that will benefit the euro and which will hurt the dollar moving forward. So we're really looking for the potential of some big switch. So that March 15th date is a big one on those Dutch elections coming up. And we could see some real big market changes coming up in the middle of March. I think that's really high probability. Gold, well, that hit our resistance that we're looking at up around 1260 and then pulled back. That was per our expectation. Gold down about $35 on the week. Silver plunged one day, ends down over 60 cents on the week. We'll talk about those also in our coming video with a short-term view for the coming week. Oil pulls back about $1, moves to the bottom of the range. We talked about the oil market in our Wednesday video called Future Speak, where we cover 23 different futures contracts with some pretty extensive cycle analysis. So that we're actually looking for it to get back to the bottom of this range and then have a pretty good month or two coming up here in March, maybe through May. We think it's a better time for oil. So you want to take a look at our little bigger perspectives on oil in those videos. S&P 500, I want to show you our weekly chart in there because we put in this Fibonacci projection numbers really a couple months ago, and we did not believe that it was going to get there. So let's take a look here at this chart of the S&P 500 and take a look right here. You can see that big red zone up on the top. We did not expect it to get up to that zone. This is a weekly chart of the S&P 500, and this is an important number, the 423.6 fib extension, and we had that comes off of way down around the 2009 bull market beginning, the bear market bottom, and here you could see this long advance. These are our cycle analysis down here, and people that follow us know what this means, but this is a incredible up move that came up and tagged that area right there. So that is an important area, and we actually think that that is a very, very it's a spot based on technical analysis that that the market likely will begin to struggle in. So I wanted to show you that particular chart because I think it's important that it has gotten up to that level. Really, as far as the President of the United States goes, Donald Trump, I think the easy time for him is over. It's been an easy time because we've had all of those executive orders, and some of them being challenged, and mostly he's gotten what he wanted, but now he has to deal with Congress. So, as far as the State of the Union address, which gave this market a big lift, Dow up over 300 points on Wednesday. I'll show you that chart in a second also. I think that now it's going to get harder because now the president has to deal with Congress. He's having a lot of problems really on both sides as Republicans are pushing back in a lot of ways on some of the things that we're hearing. The Obamacare replacement, tax policy, this border tax that they're talking about. There's so much there that he's going to have to fight his way through Congress that I think the market is really going to start getting nervous here, and it's going to be difficult. When you take a look at something like the Obamacare repeal or the tax policy, they're going to try to push that stuff through despite whatever may come out of the CBO and how they score that. Now, the CBO scores things differently than Donald Trump does. They will use static scoring, which essentially is based on the economic growth that we have had or some realistic expectation of economic growth. The POTUS is going to use dynamic scoring, which is essentially making an estimate, maybe really pie in the sky estimate of where economic growth is going. So he's going to make a case that the deficits are not going to be that big or not at all based on his policies. The CBO is going to score it differently, and I think we're going to have a battle going on regarding what can get passed because of these numbers. The real conservatives out there are going to really be in the way of anything that really grows the deficit, and we're facing now this debt ceiling increase potentially coming on March 15th. We could get into a shutdown around that time, depending on how much pushback there really is. Personally, as a libertarian, I don't believe that we should raise the debt ceiling. I think that the purpose of the debt ceiling is to keep us from expanding our debt to a level that becomes, well, insurmountable, and we're there already. So I think that the government should figure out how to live within its means, and we'll see if they can get to that place, which I really doubt it because they never do, and it's more can kicking likely coming in that area. So the bottom line, based on this discussion, is that we're getting to a tougher time for the market, and upside progress is going to be harder to make. And maybe that 300-point move on the upside was, pardon my language, shooting its wad. And I think that we're going to start to see more of a rotational market. This is going to be better for traders, a better market than we've seen, and maybe a little tougher for investors, as it'll be much more important to be a stock picker. And that's what we do, really, at askSlim. We do a lot of stock analysis, look at 320 different stocks, and we have begun to put out some what I think are rotational stocks. And on Thursday, we did a video for our members called 20 Stocks to Buy. You're going to want to watch that one because these are stocks that are really set up with high probability patterns to be moving up in what I think is going to be a rotational market that we're getting into now over coming months. So you'll want to watch that. All right, so that's basically the opening comment. Let's take a look as we switch over now to our 60-minute chart of the S&P 500. Let me get this up for you to see, where we look at what happened in the last week and the news events. Show this every single Friday, and I think it's kind of informative, so let me know if you like this. Here is the chart of the 60 minutes. The gray area is the area of the overnight trading. The white area is trading during the day. If you remember 2 weeks ago when I did this, before I left on my 1-week vacation, we were talking about the fact that markets were able to rally literally every day during the day. We were getting a lot of this type of action during the trading session. But now you can see a little tone change in here. Even after the big day on Wednesday, it sold off here late in the day. And here is Thursday and here is Friday. So the trading sessions, the nature of them are getting a bit different than we've had before. So what we had here on Monday is, people awaiting the State of the Union address. The market basically drifted higher. The Dow, it made 12 straight records on the upside. That's the best in 30 years, actually since 1987. We all know what happened in 87, right? Once the rally was over, it crashed. Tuesday, Target had a huge down day as their sales missed in a bad way. Stocks were slightly lower, again waiting for the State of the Union address. Wednesday was the big day of the week for as far as news went and market movement. What was big was the European inflation that came out. Also, that's Germany, and the European inflation picked up also. U.S., the PCE indicator was really strong. The Fed heads were all coming out talking about the March rate hike. All that rate hike news rallied the banks. First, it was the European banks that moved up, and then it was the U.S. banks that took a hold, and the big move in the financials and the big move in the market gave us this huge jump. At one point, S&P's up 35 points, the Dow up about 330 points. They gave back a little of that towards the end of the day, but that was a giant upside move. State of the Union, this was a lot like other State of the Unions I've heard, throughout my life. Lots of promise, little on detail, and honestly, I don't know how Donald Trump is going to pay for everything. $1 trillion increase in the stimulus for fiscal spending, a big increase in the defense budget, and cutting back programs 25% in the government are not going to cover that at all. And so, like I say, it's promise, it's platitudes, but I don't see how he's going to get this stuff paid for. and that's really going to be the big issue. Thursday stocks gave ground. What was really interesting, and there is some sense that people are starting to think about inflation. Bitcoin, for the first time ever, gets above the price of gold. At the time, gold was $12.29. Down $16 in the day. Bitcoin trades $12.92. What do you think of that incredible thing? Now, this is incredibly volatile, Bitcoin, and that could, drop 30-40% in a blink, and we've seen that happen before. But right now, they are buying this digital currency, and maybe trust is gaining in there. And of course, there's an ETF scheduled to come out in there if it can pass in Bitcoin, and that could be giving it a lift also. Friday also, we got a little bit of easing back here in the markets. Attorney General Sessions recuses himself under pressure because he talked to Russian ambassador during the time of the election. World markets a little bit softer. Talk of that border tax picks up. That's going to lean on the markets, I'm telling you. Yellen says it's appropriate for the rate hike coming out. And you got to say our investors just getting nervous in here as we get to a period where we've reached up at some important levels, extreme levels maybe, and that could be a problem. Let's take a look at the calendar for the week. This is our economic and earnings calendar for the coming week. Very little in the way of earnings coming out. We have Tuesday morning, Dick's Sporting Goods, Navistar, Urban Outfitter in the afternoon, and then a couple of tech earnings on Wednesday and Thursday. Really not much. As far as the important news events goes, well, the most important news events are coming out Wednesday and on Friday, this is the week of the employment information, and that is going to be probably maybe not so much of a market mover because of the comments we've gotten out of the Fed heads already. So it's not a surprise to anybody that we're going to be getting a rate hike in here. So I don't think those employment numbers can make any kind of a difference at all. That's it. That's the opening segment. We're going to jump right into the stocks that are the best and the worst for the week. All right, best stocks for the week. That's what we're going to look at here as we jump into the charts. Remember that what we do is we look at cycle analysis. That's really our main style of analysis. We also bring in many other indicators. What we're going to show you basically is our weekly charts that we look at, just like I showed you the S&P 500 a moment ago. And this was a week that, interestingly, the bigger movers were on the downside, despite the fact that the stock market was strong. For most of the week, they had gains. There may be a bit of a tell in there that the stocks that are going down more than the stocks that are going up. Still, there were some pretty good gainers. We're going to take a look at the semiconductor group first because that's where the biggest gainers were. We've been positive on a lot of stocks in this category, and they have continued to go up. We've added AMD, Advanced Micro Devices, back into our analytical universe of 320 stocks and pulled Hertz out. We do that now and then as stocks become less tradable. There's less interest in the option category, and AMD has had some big moves. So AMD we have added for this week and moving forward. Here is Micron. This is a stock that we have really, really liked, and you can see this upward movement in the cyclical pattern. So this is the cycle brackets here. That helps us as a guide to the important lows in the cyclical rhythms, and you could see this beautiful upward stair-step rhythm going right in there in the market. That I think is really clear when you look at that. And now we're in this area where we're expecting a correction. Micron, they raised their guidance, and that's not a surprise because they've been really killing it. And their we're up 9% on the week on a big gain. Bank of America comes out actually very bullish on the group. Cypress, you can see this pattern in here also, as it has a very similar pattern. When you get a stock that moves up through the entire period of the cycle, that's right in here, leaves about a week or two for a modest correction, then it's likely you get into the next positive period and tick up. That's why we have that projected that way on our charts. We think that modest pullback in here. Bank of America says there's 50% gains in here coming in Cypress and AMD. AMD down on the week, small, as they got a poor review on their new chip line, and the analysts expect them to be challenging Intel on their big new chip line that's coming out. Take a look at Mylan as we jump into the pharmaceutical category. This is a major base building in here. Earnings good. Analysts upgrade the target in here. So why do we call this a major base? Well, here you could see this pattern, the rally and the sell-off. We're following that line right there. Well, there's no sell-off yet, but there's 2-3 weeks available to pull back and then up again. This is likely an important base building. If we get a pullback here in Mylan, we think it's very worthy of a buy. If you could buy it at around 41 or 42, it's now trading 45 and a quarter. I think that would be a really good entry for Mylan. Next one we're going to look at, this one barely tradable, but in our universe, PCL. And they're killing it here compared to the some of the other online travel agents. I mean, TripAdvisor's doing horrible relative to this. You could see this great positive upside move. Barron's talks about 2,000 on this stock, trading now at 1734. And you could see in here, note the positive rhythms in here on the cycle patterns. You can see that as I trace them out. And this uptrend very, very clear as you see the bottom of those cycles moving up the 34-week moving average. Again, only a little time for a decline right over here and then up. So if you are one that trades $1,700 stocks, I think a dip under 1,700 would be a buying opportunity here in Priceline. We've had some really big news in retail stocks over these last couple of months, as many of them have been decimated. We'll call it the Amazon effect or online retail effect, as the brick and mortar just can't compete. And there's been a number of those stocks that have fought that and done better. Well, a few of those stocks, a number of them that gotten killed, and some that have gotten beat up that are looking like they're in bouncing stages. We had some decent gainers in Lowe's and Dick's and ANF, Abercrombie this week, all up about 6% on the week. Let's take a peek at those right in here, and then you'll see the kind of moves. Now, one of subgroup in here in the retail that I've been wrong on has been the Lowe's and Home Depot. My feeling was that they also would be, run into the Amazon effect along the way here. They haven't yet. Actually, Lowe's had a really good quarter, as their earnings and sales had a pretty good jump. So here is that Lowe's chart right there. You can see that it had this big upside move as earnings and sales beat, and you could see that we have been looking for a decline to come in here and then begin to move up again. Based on this, you can see this dotted line here, which is likely the phasing, that we're already in this next rally phase right over here, and we may get a little bit of a dip and pullback, but then we think both of these will be moving up again. We'll be looking for a test of that high at this, we'll call it 83.5, 84 number, but then we're starting to think that that's about the best it could do. So Lowe's had a good move in there on the upside. Dick's, DKS, as we said, also up 6%. We're looking for a bottom to form in here. You can see it's been in this negative pattern. We've had it in such. And it is possible that based on this morning star that's formed right in here, You could see that it's the down arrow, it's the down week, followed by the doji, that small one, and the up week. That to us means that this bottom is being established, and we think the worst of it is seen for dicks, and that you can buy dicks on a pullback. And here, ANF Abercrombie, they tried to break it down on earnings and they couldn't, and then it popped back up. We're projecting a bounce into this resistance zone, the important 34-week moving average, and the Fibonacci retracement levels. You can see here as it tried to get up to the 34-week moving average, it couldn't. So that's right up here. We're going to call it 14.5 to 15.5. So that would be a $2 to $3 rally from its present level, which would be a big percentage gain for it after getting down just under 11. So we are looking for a period of potential upside. In Abercrombie, we think there'll be some bottom fishing. We wouldn't be surprised to see some kind of news coming out that might be somebody is sniffing at them because they have gotten so cheap. So we think there's a play in there for Abercrombie for a bounce on the upside in what has been a nightmarish type move just in the last couple years from 34 down to 11. So maybe an opportunity for a pop. We think that there is some big opportunity, though, in Wynn Resorts. Wynn up 6% on the week on really good gaming numbers out of Macau, up 17+% there in revenues. That's 2 out of 3 good months there for Macau revenues. And when you consider that they suffered for a long time because China was trying to do something about the money laundering in Wynn, now they got problems with money laundering with Bitcoin. So this pattern in here in Wynn is very unusual. Look at this monstrous diamond that formed in there. This diamond started way back here in April, and now we're in March, so it's almost a year long. This is a massive consolidation, and we believe it's entering into this positive zone. So you can see we have a little stop in there to tell us when it crosses above that downtrend, and that hot trend line will give us some hint about when it's likely breaking out. We think that the breakout is imminent in here as we're getting into this bottoming period. That's these 2 blue spikes that you see here tell us this is the time frame to look for a bottom, and getting into this rising period, don't be surprised to see it jump towards this intermediate 50 above 120 over here. Yeah, we're talking about potential 20% gains over the next couple of months here in Wynn. Really like it. Up 6% on the week on this good gaming number. Las Vegas Sands, a little different pattern. We're also positive in there. The last ones we're going to look at here on the positive side are this area of the peripherals, storage stocks. This is STX. This is on my list of best stocks for the year. These are monstrously bullish patterns. We sniffed that out at the beginning of the year. You see it's had the big gains. So you see the way we have this drawn, maybe a little higher, maybe pull back in here, and then up again through the rest of the year. We would buy any pullbacks in here as this up 4% on the week. WDC, also similar pattern in there. You can see actually those 2 blue spikes belong over here, where we think end of March, beginning of April is the time where this stock is going to begin its next move to the upside. So WDC, another stock with a really powerful pattern. So that is a look at the best stocks for the week, some stocks that we think have some pretty good opportunities coming up in there. And now really quickly, we'll take a little 5 seconds and then be right back to you with the worst of the week. All right, for the worst stocks of the week, we've got a pretty good list here of stocks that are in the category of the metals, precious metals, silver and gold stocks, GDX. They took some big hits this week. Remember, we're looking at a period where higher interest rates, or the prospect of higher interest rates, is lifting the dollar. When you get into a period where the dollar gets a lift because of interest rates going up, well, higher interest rates make it more expensive to own precious metals. Also, they trade inversely to the dollar because the more expensive the dollar is, that's more expensive in relationship to the price of the metals. So the metals then go down, and then if you believe in the long-term perspective for the metals, it becomes buying opportunities. Well, they've been getting slammed this week. Declines from 8% all the way down to 16%. So our big loser of the week was in the silver stocks is AG, First Majestic, and Pan America, PAAS, were the big downside losers for the week. We'll be able to look at these cyclical patterns and get some sense around the time frame that we think that these declines are going to come to. Now, note, the big decline in here in AG after the unbelievable move that we had last year. This was one of our best stocks for last year as it moved up from the 2s all the way up to 19. Craziness, right? So it pulls all the way back, gives you this diamond consolidation, and then comes up into the resistance zone. 34-week moving average, Fibonacci's right in there, and pulls back. That would be ideal, really, when it comes to looking at analysis. So now looking in here, end of March is what we're looking at for this corrective period. That's kind of the time period that we think that AG is going to be a major buy, down 13 cents on the week. PAAS coming down to this support zone, this yellow corrective zone, which was perfectly on time. This also points to end of March for the low of this downside move. We think that will be a major accumulation time for these silver stocks as they get hit on a weakness in the metals and strength in the dollar. Take a look at GG, down 10% on the week. Note the timing on these cycles. Again, looking like end of March or beginning of April before that decline is over with. And take a look at ABX, down 8% on the week. We will call this more of a solid pattern. Again, towards the end of March when this low is due, not likely to give up ground to get all the way down to here. That's going to be a positive pattern. ABX would be on the list of our best patterns to buy. Let's say it pulls down into this 16, 17 area in the next 2 or 3 weeks. We would really like to buy that one. We're talking about worst stocks for the week, which may be very much bringing the best opportunities. GDX is on our list of best of trades for 2017 to the upside. Now, it was actually up very significantly for the year already, from 20 up to 25. That was a 25% gain. It's now pulling back just barely under that highest support zone that we have. There's another support coming down around the 21 area. And again, this lines up to 2 or 3 weeks more on the downside, and you can see our projection moving to the upside. So while we do have what looks like weakness here in these precious metals, in the actual metals and in these precious metal mining stocks, we only think there's a few more weeks to go in it and a major opportunity in there on the long side. So I think that put that on your radar for when those bottoms are coming in. And if you're a member, level 3 member, you can write to me and ask me about that analysis as we get closer in there. Level 3 and level 4 members, well, we get to talk about analysis and all kinds of trader issues. All right, take a look at Triple D, which was down 12% on the week. This is the stock that, of course, is a 3D printer. They, until I think it's going to take major medical uses in 3D printing for them to really be able to get a breakout in here. Right now, what we're looking at is a giant wedge, basically. If you look right here, you can see this upside trend line right there. And if you look right over here, you can see this right here. We think that is a major consolidation. Now, it's going to have to hold above that low at about 1230 in order to complete this. We have a low due in here sometime around middle of April, and you can see it turning down on our projection. And if it holds above there, then there's a possibility we can get a breakout. GE, of course, course, has shown interest in these 3D printers, and that might actually be what really gives these things a lift. So if we can hold, above that area of, we'll call it 1240 in this next month and a half, then I think there's going to be a good opportunity in here in the triple D and triple D Stratasys SSYS. I have a feeling that sometime into this May, June, July period, we're going to be getting some much better rallies on much better news. Take a look at SunPower, SPWR. Here you'll see here in SunPower that the we've been in this green rising zone, and I have a feeling that that rally now is ending. It's going to be important to hold above the area of right around this 620 area. I don't think that's going to be any kind of an issue in here. You could see the way we have this projected. We think we're moving into a yellow corrective period in here that lasts also into around the 1st of April, and then turning up. So we're going to look for some pullbacks in here. SunPower lost 10% on the week after hitting that key 34-week moving average. That's really an important moving average to watch. You can see what happened here at the 34-week moving average. Wow, here's a big failure right there at the 34. It held up a little bit there, but that's really a key moving average, and it's now failing from there also. So we're going to look for about a month or a little bit more of pullback in there, and then we think it would be a better buy. FSLR down 9% on the week. Note the 34-week moving average right over there, and then it's pulling down. So we're kind of thinking again out into sometime mid to late April for this one before you can really buy it. That's an engulfing pattern right there at the 34-week. That's a bad occurrence, and it says that there is likely more moves there on the downside coming. One more stock that I want to talk about in here that had a big break to the downside, COST, Costco. You know, this stock has been immense. It had kind of a channel that it had been trading in for a long period of time. And now this move in here is causing some worry. As it broke out above the channel, we'll call this an up thrust is what it's called when it gets above there. But then when it quickly gives it up, and you see the evening star formation here at a major 78.6 extension, that says to us that there is some risk in here. Now this goes down to the first week of April. We would expect that this is just the beginning of something in there in Costco. Their earnings they really missed, and we're going to call this a potential of a major top here in Costco. If it can get a pretty big break in here, rally, and then not make a new high and then fall off into there, that's going to signal to us that it's a major top coming in there in Costco. So this chart in here is definitely something we think to worry about. Take a look here as we look at the daily pattern. I want you to note that orange arrow in there. That's our option bias. And what that told us at that point is that there was an extreme move on the upside, and the probabilities of a downside reversal were very high. It held up for 8 more trading sessions, and I got to tell you that's unusual, because what happened is it held up into earnings. Usually by 3 to 5 days after this kind of a reading, it reverses to the downside. The opposite happens on the upside. Well, here's that beautiful reversal right there. You can see our shorter term patterns. Look at this beautiful cyclicality right in here. That calls for a couple days maybe, and then get into a potential bounce. But we think that bounce is going to fail, and because of the intermediate pattern, we think it would be a short sale if it tries to rally. Note it hit that minor rising support right there, and we wouldn't doubt it would try to get a bounce from there, but we actually think this whole time period that we're looking at on the weekly into the first to second week of April is going to be a negative period for that, and we'll be looking for a potential breakdown in there. So that is a look at the worst stocks of the week. I hope that all of that information was valuable to you and you use it going forward, because we talked about the rotational market that we think is coming, and I think it's when you get a good feel for stocks, you can really benefit as a trader in markets that are more rotational. I think that's where we are right now. I've got a little special for you to look at right now. It's just a couple of minutes long. I really want you to look at this because it's an unbelievable new thing that we have, and I think it'll benefit all people of all levels of the market. And so take a look at this, and then I'm going to give you our short-term view for the stock market for our coming week. Hi, I'm Steve Miller. I want to take just a few minutes to talk to you about our new video workshop, the 5 Essential Building Blocks to Successful Trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success-failure cycle. That cycle where, you're doing really well and all of a sudden you get into a slump. There's often forces within us that, bring poor decision making. I share mine, what those negative forces are and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. That stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on the plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section, that really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. All right, short-term view for the coming week. Thank you for watching that video on our, I think, absolutely great workshop. And again, you can just go to the askSlim site, go up to workshops, and click on that, and you'll get more information on it. And you won't believe how comprehensive it is. And I know it'll help traders of all levels. All right, so here we go. We do this every single week. We look at the short-term view for the stock market. Our members will see a separate video, which is for 5 major markets, with a lot of depth into the momentum indicators for the 5 markets. So here's the S&P 500. While we were away before we left a week ago, our expectation was that the market would have a pullback, and we thought it would pull back with the S&P 500 getting down to about 2332 or lower. It didn't. It pulled back, I mean, barely perceptibly. As a matter of fact, it had just 3 days of sideways movement, which made up the whole decline. That is really rare. In fact, this is the second cycle, and I'll show you that in a row, that did the same thing, which shows just absolutely the immense strength that's going on in the market. Now, I showed in the beginning of this show that I believe that we had gotten to a very, very important level on the major market that it now, I thought, would begin to stall from and rotate, essentially, and getting into a more risky period moving out forward. We'll see how that sets up on the intermediate, But right now, we think that upside progress is going to be much harder to make. Take a look here as we look at the charts in here. There we go. We got the chart up. And this is what I'm referring to by incredible strength, and that is this high on the 16th day, actually, might have been the 17th day, and that's the 18th day right there, is just incredible to have that type of tight correction. You can see here 17th day high, 20th day low. This was really a 14th day there, and 19th day. These are all incredibly strong patterns when you get that. So when you rally up through most of the pattern, it leaves almost no room for decline. And you can see in here we were in this rally phase right there, which it's having started doesn't surprise me because the timing is right. What's shocking is that during this corrective period here, you got nothing right there. It really had not given up much ground at all. So now, as I showed on the weekly, we're in a major resistance area. We're also there on this daily pattern. And you could see this yesterday was that's Thursday, was a dark cloud cover there, which is essentially telling us that the market is likely putting on a peak right there. And what we're expecting for the coming week now is that it's likely to be in a choppy week. In other words, we think it'll try to rally again because this is a little early for it to peak right over here. But then we think if it pops up into here, it will start to roll over again. So we're looking at this pattern right in here, and that these early patterns right there, which is essentially this right in here and this right in here, that generally has only brought minor little pullbacks, minor little rallies and little pullbacks. And then this one over here, which is 2 weeks from now, is really the tell. If it can do what it's been doing in each of these periods here, then we're still in this craziness on the upside. We doubt that's the case because of location. What we're really looking at is something more like this attempted rally, attempted pullback. That gives you a small week this coming week if we're right about that. Choppy week, upside fails, but no real downside yet. And then after that, into the following week, this is the key, that rally right there. So that's what we're looking for this week. Small attempted rallies, small pullbacks, not much. The following week, then, it opens up a potential for more rally. This actually aligns with our VIX pattern also, which the members will see later on. And then after that, these key cycles turning down are the important thing, and we think we are getting into a little more of a corrective period over there. So we'll just call this week choppy, sideways. Rallies don't really hold, a lot like we showed you in the beginning of the show, where these days are not able to have these big rallies that hold up through the close. I think the buy on the close market that we've been in is over with, and that we're getting into a period here right now that is more likely to be rallies that don't hold, and maybe even after, not this coming week, but the week after, getting into a much more risky period for the stock market. That's it for today. Appreciate you watching that little piece on our 5 essential building blocks to successful trading. If you have any more questions about that, make sure you write me, Slim, at askSlim.com. Our members get a discount on that, so if you're a member, level 2, 3, or 4, all you have to do is ask me for that discounted link, and I'll send that to you. Or become a member, and then you'll get the discount on that. So that's it. We hope this was really a valuable show for you, and you can cash in on some of the things that we shared with you. Be careful out there because it is crazy. We're always wishing you great trading.